Alright, and here on our news it says, while XRP and crypto community in US debate Clarity Act, Japan just approved its own. Right? While politicians in the United States spend months endlessly arguing over the Clarity Act, something historic just happened across the Pacific. Japan didn't wait around. They didn't hold another round of endless debates. They just officially approved a framework that reclassifies XRP and other key cryptocurrencies as recognized financial instruments. This isn't just another routine news headline or a random rumor floating around social media. This is the green light for one of the world's top financial hubs to launch a spot XRP ETF. Analyst X Finance Bull recently pointed out that while American regulators are stuck in red tape, Japan is actively building the highway for institutional capital. If you want to know where the global monetary shift is actually taking place this 2026, stop staring at Washington, D.C. and start looking at Tokyo. Alright? So let's start with our very first question. Is Japan leaving the US in the dust when it comes to XRP regulations? For years, global markets have been held back by regulatory confusion in the West. Investors have been sitting on their hands, terrified of surprise enforcement actions or sudden policy shifts. But Japan's decision to formally recognize XRP as a financial instrument changes the entire playing field. By giving XRP a clear legal status under established financial law, Japan has effectively removed the roadblocks that kept traditional financial institutions on the sidelines. So, my personal opinion is that the US is rapidly losing its competitive edge in the digital asset space. While American lawmakers continue to debate the nuances of the Clarity Act, Japan is demonstrating what true regulatory leadership looks like. So, I see this shift causing a massive migration of institutional capital toward Asian markets. When giant funds see a country offering absolute legal certainty, they don't wait for the US SEC to catch up. They allocate their capital where the rules are clear, and right now, that place is Japan. Now, was the Japanese XRP ETF prepared years in advance? Here is where the story gets really fascinating. Analyst X Finance Bull revealed that preparations for a Japanese spot XRP ETF were already underway well before the Upper House Committee officially passed this new framework. The institution spearheading this push is none other than SBI Group, one of Ripple's oldest and most powerful partners in Asia. SBI didn't scramble to build an ETF product overnight. They spent years laying the groundwork, waiting patiently for the regulatory environment to catch up to their vision. They constructed the investment vehicles, established the custody protocols, and aligned their corporate strategy with Japanese financial authorities long before the voting took place. Now, my personal opinion is that this level of institutional preparation proves this is not a short-term hype play. SBI Group didn't invest billions of yen into infrastructure on a gamble. They knew the legislation was coming because they helped demonstrate its necessity to lawmakers. When you see a financial giant like SBI quietly building behind closed doors for years, it tells you that the eventual launch of a spot XRP ETF in Japan isn't a question of if, it is a matter of when. This was a chess move planned multiple steps ahead. Now, why does a 20% flat tax rate change the game for institutional investors? Right? 20% flat tax rate change. One of the biggest hurdles for crypto adoption in many countries is predatory tax policy. In some jurisdictions, crypto gains are taxed at extreme rates or treated as miscellaneous income, which creates a massive headache for regular investors and professional fund managers alike. Japan is completely flipping the script by applying a flat 20% tax treatment to crypto investments reclassified under financial instruments. This 20% flat tax structure allows XRP to be easily integrated into traditional brokerage accounts, retirement portfolios, and corporate balance sheets. Wealth managers can now offer XRP exposure to high net worth clients using familiar, tax-efficient financial products rather than forcing them to navigate self-custody or complex offshore exchanges. My personal opinion is that tax structure is often the single most underrated factor in driving real adoption. You can have the best technology in the world, but if the tax burden is too high, institutional money will walk away. By copying the tax rate of 20%, Japan has turned XRP into an insanely attractive asset class for traditional wealth managers. I believe this single policy decision could unlock a wave of domestic Japanese capital that dwarf previous retail rallies. Now, how does the SBI and Ripple partnership lock in XRP's real-world utility? To understand why Japan is moving so aggressively, you have to look at the deep-rooted relationship between Ripple and SBI. SBI Group. This isn't a new partnership built on press releases. SBI Visit Trade already supports RLUSD, and SBI Ripple Asia has spent years operating infrastructure specifically designed to issue and settle tokens on the XRP ledger. XRP isn't being introduced to Japan as a speculative trading token. It is being integrated as a core utility engine for cross-border banking settlements. SBI's financial architecture relies on the XRP ledger to move value rapidly and cheaply across Asian corridors. The new regulatory approval simply gives legal validation to infrastructure that SBI has already been testing and operating in real time. Now, my personal opinion is that the synergy between SBI and Ripple creates an unbreakable foundation for XRP. Most crypto assets rely purely on retail speculation to maintain their market cap. XRP in Japan, however, has real institutional volume flowing through its ledger every single day. When a country's dominant financial conglomerate uses an asset for core operational liquidity, that asset stops being a speculative token and becomes indispensable financial plumbing. Now, what does $1.48 billion in US ETF inflows tell us about Japan's potential? Even during periods of intense market turbulence and economic uncertainty, spot cryptocurrency ETFs in the United States managed to pull in approximately $1.48 billion in capital. Right? $1.48 billion. This figure represents a massive amount of demand from investors who simply want the safe, regulated way to hold digital assets without dealing with private keys or exchange risk. Now, imagine what happens when you take that exact same ETF structure and introduce it to Japan, a market with higher public trust in traditional banks, a clear 20% flat tax rate, and zero ongoing litigation surrounding the asset. Analyst X Finance Bull emphasized that the proven success of US ETFs shows that institutional demand is real, but Japan's unique market conditions could make their ETF launch even more impactful on a relative scale. Now, my personal opinion is that $1.48 billion is just the tip of the iceberg. Japanese retail investors and institutional funds hold massive cash reserves in low-yield bank accounts. The moment a spot XRP ETF becomes accessible through their regular Japanese brokerage apps, a fraction of those trillions in traditional savings could flood into the XRP ecosystem. The market has severely underpriced how much capital is sitting on the sidelines in Asia, waiting for a regulated product just like this. And finally, here is our overall conclusion. While the Western world remains distracted by regulatory gridlock and political debates over the Clarity Act, Japan has quietly delivered a master class in how to adapt digital assets by approving a framework that classifies XRP as a financial instrument, establishing a clean 20% flat tax rate, and clearing the path for SBI Group to launch a spot XRP ETF. Japan has positioned itself as the capital of global crypto utility. Now, as a market observer, the key takeaway is clear. True adoption is driven by infrastructure and legal certainty, not by speculative social media hype. SBI's years of quiet preparation prove that major financial institutions see XRP as a fundamental piece of the future banking system. The engine is running, the regulatory track is clear, and Japan is ready to lead the world into the next phase of institutional digital asset adoption. And this finally ends our video. Thank you very much for watching and see you on the next one, or you might just as well check this next recommended video right here.